Morning, everyone. How's it going? Hope you're doing well. I'm just here on a call with Benny. Benny, how's it going, mate?
Yeah, all good mine, man. Can't complain at all.
Good stuff. Good stuff. There's been a lot of movement in the markets over the last couple of last day and a half or so. We do want to talk a little bit about FOMO before we dive into the currency pairs that we got on watch for today. We do have 4 pairs on watch. You can see on the right, we've got pound dollar, Kiwi yen, dollar CAD, and CAD yen as well. But what we do want to start off by saying is that even though we've had a lot of momentum and a lot of movement, especially on pairs like, for example, Kiwi yen. I know Benny's going to dive into this in a little bit in more detail, but in all honesty, unless you took a risk entry from the very, very top here, there hasn't been a viable, valid entry on this. And this happens from time to time. The market can move a couple of hundred pips and not provide us with an entry. If there is no entry, you haven't missed a trade. So don't beat yourself up. Don't get all up in your own head and thinking that you're a terrible trader and you've missed all these opportunities. We have so much more downside available on a lot of these pairs that we're looking at. There is so much more opportunity to come in the markets. Just because we didn't get an opportunity right here from the very top doesn't mean you've missed the whole thing. So stick to the plan, stick to what you forecasted, don't go off script, and just try to keep your mental stability and your sort of mindset on point as well, because this is just one trade. This is just one move in 1 week. There'll be another bust right around the corner. So yeah, we just wanted to start off by talking about that. And now without further ado, we'll just start from pound dollar and then we'll just carry on through the pairs. So firstly, pound dollar, if we start off on the daily, you can see here that we were sitting very, very close to the top of structure. We didn't quite reach this outer structure. We didn't quite reach this ray line double top, yet we did get more than 90% of the way to this move. We don't have to reach this. It's always the probable and the possible, okay? So what we have seen now is a very, very solid move to the downside. On the weekly, you can see we've got this basically an evening star formation and a bearish engulfing candle on the weekly time frame pretty much, and it is looking likely that we are going to see more continuation to the downside. If I just drop a little bit lower in this onto the 4 hour, what you can see here though is that this is the sort of area, and Benny covered this extensively in the quick tip season 4, is the 3 zones. So the areas that we want to be looking at taking a 1 hour flag or a 15-minute flag, and where we want to be waiting for a little bit more confirmation. In this area right here, if I just drill into the 1 hour very quickly, after having all of this move to the downside here, this is the sort of area right around here where you want to be extremely careful about diving in on a very, very small 15-minute flag or anything that's really without much structure. This whole move has been pretty impulsive, but we are so far into the run now that anything like this here on the 15, this does not pique my interest, purely because this is begging you to see exactly this, a tag in and a tag out. And if I just size this up, those of you that took this, you may have been able to get this to break even, although it would have been very, very tight. Yeah, if you'd been really on the management, you probably would have got it to break even before it retraced. But if you had a slightly wider stop, this is the sort of area where you'll get tagged in and tagged out very, very quickly. It's areas like this where I will be waiting for something with a little bit more structure, like so, visible on the 1 hour before I look to get involved in this sort of trade. Benny, was pound dollar on your radar for this morning? And is this sort of area and like taking your interest of somewhere where you want to be taking like a 15-minute flag like so?
No, I think you summed it up really well. I'm not looking for any tight 15-minute flags or anything like that. I mean, a tight 1 hour flag just becomes a very, very valid position in my eyes. Still absolutely fine if you're okay with the risk. For myself, like, and just applying the rule of 3, just coming with the zones, I would much prefer this to be a larger flag. And it kind of looks like that's what is developing on a lot of the pairs at the moment. So for me, I didn't look to take this. I think some of the yen pairs formed similar flags in better areas anyway. So I would prefer to choose a yen pair purely because of what you said before, which pound dollar being so far into the run and after so many impulses, the larger flags are just the more smarter approach here, in my opinion.
100%. Yeah, definitely. Sitting here, I would argue that we're no longer in the green zone. This is where we're definitely in the amber zone, potentially even the red sort of zone. I wouldn't be just using the green, amber, red, the 3 zones on this entire structure. It's too large really to make sense. So yeah, it's an area like this where I'd want to hold off, be a little bit more patient, wait for something with a bit more structure. We're not going to miss the entire move. We don't need to have FOMO, so we just need to wait and let the market kind of give us permission and give us an entry that fits our plan. But that's pound dollar. I know that you have a couple of yen pairs on watch for today, right, Benny?
Yeah, correct. So my 2 favorites for today would be CAD yen and Kiwi yen. So you can see same kind of approach and same kind of price action what we just seen on pound dollar. We had a lot of movement over the last kind of 36 hours or so with a large, bearish impulsive leg. And really now it's the same thing. So like even just looking at this structure, you don't even need to draw the zones on. You know that that's in the amber zone, right? So what's majority of the times, what are we going to be waiting for? Larger developed flag. You still can take the really tight, clean 1 hour, 6 to 8 hour kind of textbook flags. I would have still taken that. However, that's not what we've got forming at the moment. And I think this is the exact reason as to why we applied the rule of three and why we decided it's so important, is because a lot of people would see that momentum leg and just look to get in after 6 to 8, 15-minute candles. And then if you just look at the price action there, you would have been tagged in, tagged out. So this is a good representation of like why it's so important to have this rule. And I think at the moment, you can see this last hour obviously has been quite bullish in terms of that 1 hour candle. So quite engulfing. So really at the moment, as all I'm looking for on the 15-minute or the 1 hour is just a much larger developed flag. So if you just kind of draw just a textbook kind of larger developed flag, Neil, that would be fine for me. I'm happy to take that. It's obviously, just looking at this price action now, two bottoms would be decisive. But we really just need something to give us confirmation from the market. So something like that, you can still look to take your risk entry if you can get kind of that 1% to the bottom, but it's really just about patience at the moment and just seeing what develops. And like what Neil was talking about before, not applying the element of FOMO and just kind of seeing that impulsive leg and just wanting to dive into the market. Just sit on your hands, wait for it to give you the entry that, is required or that fits your plan, and then just execute accordingly. Just because I had an impulsive leg doesn't mean that you missed out on anything or you're no longer going to be able to take anything. Anything larger developed in all of these pairs that we'll probably be covering today will be very, very high probability in my eyes.
Mm-hmm. Yeah, really well said. And I think it's so important to talk about this. And I mean, I didn't take a trade yesterday or today, and neither did yourself, Benny. And, I think just because we do or don't do something doesn't mean that it's 100% right all the time. But even though there's been a lot of movement, neither of us were involved in the market just because there was no entry that fit our, entry criteria. So you don't always have to be in the market. And especially when we have these sort of moves, it's nice if we can get involved, but you can only really be involved if it makes sense and if it's in accordance to your trading plan. So moving on to dollar CAD. Dollar CAD was a little bit of a wild card for me. It was one that I was looking at this and I could feel that this is going to be on a lot of people's radar. But entries like this, even though they are pretty valid, if I just start off on the daily. So we've got this very, very long corrective move to the downside. We've got this ray line double bottom. We've been falling in this descending channel and we've had this impulsive break to the upside. Very, very clear impulsive break up or out of this descending channel. And it's now in areas like this where we'd want to see a larger 1 hour correction formed before continuation to the upside. Trades like this, however, I don't know. I think this just comes with a little bit of time and experience, but even though this is an impulse and a flag here, it's trades like this where I find that they typically are not that reliable. I'd want to see something with a little bit more structure to it. Although we have two tops here, it's debatable that this is the bottom of the flag. You could always pull this down to here, even down to here. So this is something where I would want to see, like what we're talking about on pound dollar and on Kiwi yen as well, something with a little bit more structure to it. And then I'd be, more inclined to get involved in this trade. Something a little bit along these lines. We can draw it in. And then when we've got a defined lower bottom to this flag as well, then we're able to see where the top is, where the bottom is, and we can decide if we want to have a risk entry or a reduced risk entry. But this is one to keep on the radar. I think this may be ready in the next, it could be ready later today. And if not today, then probably tomorrow as well. So it's still early in the week. It's only Wednesday, really. So we've still got a lot of trading left to go for this week. So I wouldn't rush into this one. We are also, I wouldn't call these significant highs, but they're maybe worth mentioning as well. You could argue that we're roughly trading right into the highs over here on the left-hand side. I'd probably say that this is the most significant one of the lot. It's just another negative confluence factor. It's a valid trade, this one. I wouldn't be calling this one high probability. I'd say that there's probably an equal amount of negative confluence factors to positives on this one. So yeah, I'm just going to be a little bit more patient with this one and just kind of see how this one develops over the next 6 to 8 hours or so. Benny, was dollar CAD on your radar?
Yeah, 100% it was. I love the descending channel and the impulsive break to the upside there. I did have those highs to your left that you just covered previously marked in as well. So for myself, clear no 15-minute flag there. I want to see something confirmed and more developed, and that's really all I'm waiting for. I guess that's kind of the theme for for the rest of this week is just patience, waiting for development. Now we've had these impulsive legs where the positions are in good value areas. Doesn't mean we just rush in. So for myself, yeah, anything larger, like if we can get a confirmed bottom here and then push back up, and then there's opportunity to come back down for like a second or third touch, I'll be looking at something like that, providing I can get 1% to the top or at least a decent stop protection. But for the most part on dollar CAD, you know, it is a little far into that run. That impulsive legs are decent. So I just want to see something clear and concise before entering, especially with dollar CAD.
Yeah, makes a lot of sense. And then moving on to the final pair, CAD yen. I know that you've been keeping your eye on this one as well. I just start on the 4 hour for you.
Yeah. So CAD yen, you guys know, it's one of my favorite pairs. Structurally, we obviously didn't reach that override slash, you know, would have been fourth touch, or just I wanted to see it reach the override or break out of this consolidation phase that we were in within this channel. And you can see really good momentum push to the downside. I would argue, given the entire move and the structure of that, I would say we're in the amber zone. So again, a tight 1 hour flag, I still would have taken, but it would be more on the valid side. I think that's where I just want to clear something up quickly is there's nothing wrong with taking stuff like that, providing that your high probability to valid ratio is good. If all of your trades are valids because you're just getting in on 15-minute and 1 hour flags anywhere within the zones, that's bad. But if you're taking the right ratio of high probability to valid, whatever that might be, 70-30, 60-40, it really depends on your own personal preference. I wouldn't go anything less than kind of like 60-40 for myself. That's just speaking through my own style, but that makes it okay. And just because most of the trades I've taken these last 2 months are high probability, I'm okay with the tight 1 hour flag there because it's the amber zone. It's all good. If it was in the red zone, then definitely not. But you can see here, same kind of principle as Kiwi yen. These last 2 hours have been quite bullish. So for myself, I'll be waiting for it to push back down and then kind of get some confirmation on the flag. I think any tight flag has been removed now. There's no way we can kind of form that. So at the moment, just larger 15-minute or 1 hour flags, as Neil's about to draw here, would be perfectly fine. If we push back down from here, yeah, exactly that. If we get something like that, I'm happy to take that, only because I love the area that we're in. Good momentum push, larger developed flag. That's good confirmation from the market, and that's something that I'll be happy to risk my capital with every single time. So
would you be looking to take a risk entry on this one or sticking with a reduced risk entry, Benny?
I don't like to kind of call that until we have that top. So if it just had a kind of a 15-minute bearish retrace from here, then I know, okay, well, this is most likely the top, and then we wait for the second top. Obviously, you can't get 1%. So it really depends on when we make that first top, and then I'll be waiting for the double top to make that decision. I kind of like to leave that one until the last leg, and then I'll make that decision. But typically, you know, I can see there you've already got 30 pips. So a reduced risk is probably going to be too big. It's be at least 60 to 70. So let's just see, maybe my math is wrong. But okay, I was very wrong. It's 50. So 50 is okay. 50 is okay if we make the top here. But if we push up any higher, then I think risk entry is probably the only choice.
Yeah, well, 50 seems like a lot, but when you look at the downside potential available on this, we've got to always, you know, keep in the back of our mind what's relative, right? So often for a lot of pound pairs, we have larger stop losses because the candle's just typically larger, but then the risk to reward is always relative. I would argue that we could say that this is probably the next point of inflection down the bottom here. And even with the 50 pip stop loss, you've still got just over 4% down to the bottom here, which is nothing to be sniffed at all. So yeah, it's very interesting. I mean, I think what we need to always keep in the back of our mind is go with what's relevant and what's right for that trade at that time. You know, if it was euro dollar and it's a very tight flag, then 20-25 pips is the standard. But, you know, sometimes, you know, 50, even slightly higher is what we, you know, have to utilize. So yeah, so that's the 4 pairs that we have on watch for today: pound dollar, Kiwi yen, dollar CAD, and CAD yen. Just, I think patience is the name of the game for today as well. Not diving in because yesterday we had so much momentum. Just wait for a trade, an entry, a setup which fits your plan, which you're happy to take 100 times in a row. And yeah, just be safe, guys. Don't just get involved in the market because you've seen other people doing so.
Really, really well said.
All right, so that's it from us too. We'll be checking in on Slack throughout the rest of this week as well. So hope everyone's well. Hope everyone's having a good week so far, and we'll catch up with you soon. Take care, guys.
Take care, guys. Bye.